All right. What's up, tycoons? What is up, traders? We're going to be looking at Propy today. Okay. Ticker symbol PRO, USDT. All right. Going to break this down for you guys on the daily chart. We're going to look at the MACD. We're going to go over the fib retracement levels and how you can use these three things to give yourself an edge in the market. You need to have an edge when it comes to trading. I like to say trading in cryptocurrency is like a battleground. It's like going to war. And you need to have those proper weapons and know how to use those weapons to increase your odds of success on the battlefield. So make sure to smash the like button and subscribe to this channel if you guys are new, and we'll go ahead and jump straight into it. The first thing we're looking at is a chart pattern known as a falling wedge, indicated by these two trend lines. It is a bullish pattern where you'd be looking for a breakout to the upside. Now, just because we have the pattern on here doesn't mean it has to play out, and it hasn't played out yet, but it is something we're watching. Now, something really important is going to be the MACD. If we zoom in on the MACD a little bit, all right, and especially on the daily chart, this is one of the most effective time frames to use this on. It is going to predict and show you guys a sell signal every time, and there's going to be most of the time a large move to the downside. So the sell signal is going to be this red line, and when it crosses below the white line here, that's going to be a big move. That's going to be your exit signal, right? So we see right around here. Okay, we get our MACD sell signal, and if we take a look, it was a pretty sharp move to the downside, right? It dropped 42% at its lows. Now, when you combine that with the fact that we are getting rejected at our three major retracement levels, then you have two things coming together, aligning, giving yourself an edge, saying, hey, we could see some bearish activity in the future here. I either need to close my long position or possibly take a look at getting a short position. The way the retracement levels work is you take a swing high and you connect it to your swing low. So you see how we have this sharp move to the downside. Nothing is going to move in a straight line up, and nothing's going to move in a straight line down. What it's going to do is come up, retrace, and then continue that trend, or it's going to come down, retrace, and continue that trend. So the 61.8, 50%, and 38.2 are the three most common and well-respected retracement levels there are. And if you get a rejection on those in a downtrend, which cryptocurrency as a whole is in a downtrend, it's no secret. You see, we get the move down, we retrace up, we get a wick above our 61.8% retracement level. Now, this works, okay, about closing, right? These wicks don't matter. You see how we wick up here and we wick up here as well? We're closing, though, at our 50% candle, or at our 50% retracement level. So, ultimately we came up, we got the retracement, and then we're continuing that downtrend to the downside after getting the rejection at our 50% retracement levels, and then the MACD exit signal, right? Over here, we can see a very similar thing happening. All right, what we're doing, we're taking our swing high up here, connecting it down to our swing lows over here. You see, we come down, we retrace up, and then we continue that downtrend to the downside. All right, and so also after rejecting our major levels up here, we get another MACD sell signal right here. And if we take a look again, that's another sharp move to the downside. From there to the lows was another 50% drop. Over here, what we're seeing is just the same thing, right? And this strategy really works very, very well, and it's going to continue to work well, and it works well in a bull market as well when things are in an uptrend. But what it does, again, taking the highs all the way down to the lows, right? So you come down, retrace, get rejected, 50% retracement level. Over here, we're doing the same thing, come down, retrace, continue the downtrend, and we've been just continuing this pattern and pattern over and over again. If you take a look at the MACD, it's also lining up with some MACD sell signals, okay? Over here, we get a MACD sell signal. We get a sharp move to the downside. Over here, we get another MACD sell signal right here, and then we get a sharp move to the downside. Over here, we get the MACD sell signal. We get a sharp move to the downside. So, if you're ever a little bit hesitant on when to sell, maybe you're in some profit and you don't know if, you want to be able to know when this thing is going to have a sharp drop to the downside. And a lot of times, this MACD sell signal has predicted like a 40-50% drop, as we just took a look at. Then, use this tool, use this strategy to go ahead and give yourself an edge. And that way you can start knowing some of the major levels you need to be cautious of. Now, you can also use the fibs another way, and I'm going to show you guys how to do that real quick. We're going to look and find our support levels to the downside in case this thing goes bearish and continues this downtrend, right? So you're going to look for the 1. This is going to be your 100%. Then you're going to click on the 1.618, the 1.272, and the 1.414. So now we see that we're all set up, right? We have everything we need for success right now. Okay. What we have is our major retracement levels right here. So we have our swing high connected down to our swing low. If we come down and get a retracement up to here and get rejected at these three levels, most likely we're going to continue that downtrend and come and test our breakout level, right? Now, there's no guarantees we're going to get a bounce. We could trade sideways a little bit and break this level. But once we break 100%, we're going to head down towards our fib levels that we just used and generated. The reason I use the fib so much, and rather than drawing my own support and resistance lines, right? And rather than, for instance, me coming in here and just drawing my own lines, like let's say like this, like, okay, here's resistance, here's support. Rather than doing this, the reason I use the fibs is because about 70% of trading is done by algorithms, right? By algos. And this is true in the stock market and the cryptocurrency market, whether you believe it or not. So it's very good to start using some mathematically generated formulas, because this is where the price action is naturally going to be drawn to. And then, there's a good chance that algorithms are also using some of these formulas as well. The fibs exist all throughout nature. They exist in the stock market, the crypto market, they exist all over. So it's really good to start using those. So now what we have is we have our major areas of caution, right? Up here. If we do get a bounce, we know we need to be cautious here, right? Just because we come up and retrace doesn't mean we have to continue the trend. If we break through these levels, right, that's when we can spot a reversal. Remember, these are the fib retracement levels you're looking at. So it's looking for a retracement for a continuation of a trend. If you break through your retracement levels, that's how you can spot a reversal, and potentially we make a high and then a higher high and come up here and test this trend line. And if we test this trend line and get a breakout, ultimately we could get the bullish breakout of our chart pattern. But you can't be too biased. You need to, have your targets to the upside and have your targets to the downside. And so that's what we're doing. Okay. It's been a brutal crypto winter. Most likely that's going to continue in 2023. So we have our major support levels down here. Our breakout level to the downside is going to be 33 cents. Below that, we're looking at a price target of 28 cents, 25 cents, and 21 cents. Those are going to be the major areas of support that this is going to be drawn to if it continues bearish. If you take a look at our MACD, we did get a sell signal right here recently. Okay. So, take a look right here. We got a sell signal. All right. And we have started to drop a little bit. And if it works, how the MACD has been working, we could potentially see this thing drop very, very hard. So we're going to keep a close eye on these levels on 33 cents. If we break below there, we could be heading down to 28 cents. And then above, we have 40 cents, 42 cents, and 44 cents are really going to be our major areas of resistance. If we're able to break through those, then we can go ahead and look at a possible reversal forming where we make a high and then a higher high. So hopefully you enjoyed this video and learned something new. If you did, smash the like button and subscribe to the channel. I'll be dropping content like this every single week.